or morning, depending on where you are connecting from. My name is Brian Cancian, Business Development Manager here with Foundation Software. It is the top of the 1 o'clock hour here on the eastern end of the country. We have a lot of people registered and still see quite a few trickling in. So we're going to just go off camera here for a moment, give everybody a few minutes to get logged in, and we'll be right back with you. All right, good afternoon, everybody. It is just a few minutes after the top of the hour, and would like to take a moment to welcome you back to our webinar series, CICPAC series. Today's webinar is going to be on transitioning from QuickBooks to construction-specific software. My name is Brian Cancian. I'm the Business Development Manager here with Foundation. That includes just working primarily with a lot of our partners in the space, complementary software companies, CPA firms, et cetera, to bring in additional streams of integrations, revenue streams, et cetera, with Foundation and our partnering companies. As many of you know, we have a CPA directory on our website that is focused on producing a quality list of construction-specific CPA firms. So in the event that you might be looking to make a move into somebody who has more specified experience in the construction market, please feel free to check out that directory. On it, if you get into the Ys, you will find our friends from YHB CPAs and Consultants, from which we have Dory, Franzel, Curts, and Morgan Lee with us today to present. We're going to be talking on the challenges of the construction business and a lot of the issues that brings up, particularly when dealing with a less industry-specific piece of software like QuickBooks, and how transitioning over to another piece of software, much like Foundation software, could help you streamline your operations and maximize the benefits of your accounting software. After our presentation today, we will be opening up to Q&A, so you'll have a chance to ask your questions directly to the experts. If you look at your control panel, there is a little icon across the top, has a little question mark in it. That will open up your questions pane. Please feel free to type your questions into that window as we're going through the presentation, as those questions become fresh in your mind. They may or may not be answered throughout the presentation, but if we don't get to that during the presentation, we will definitely do everything we can to get those questions answered at the end of the session. Also, before we get started, just want to mention the chat. There's another icon there that looks like a couple of chat boxes. Some of our admins here will be putting some information there for you. Just saw they posted a link. And also, just remember, you guys are muted in attendee-only mode, so we cannot hear you. So talk to us through the questions box. Also, you will be receiving a recorded version of this session, along with, I believe, the slide deck, if I'm not mistaken. But those will be emailed out to you after the wrap up, and once GoToMeeting or GoToWebinar does what it needs to do to process the recording. And I think outside of that, that is all for housekeeping. So again, I'd like to introduce Dory, Franzel, Curts, and Morgan Lee from YHB. And I'll let you ladies take it away.
Great, thank you, Brian. So I just want to introduce myself really quick. I am, as Brian said, Dory, Franzel, Curts from YHB. About 3 years ago, YHB spun off a client accounting and advisory services department where we assist clients with their internal accounting, their software implementation, and so forth. But I've been working with clients in transitions from software packages like QuickBooks to industry-specific softwares for probably well close to 3 decades now. And so I think there's a lot of lessons learned here that we'd like to impart with you. And I have with me today Morgan Lee on my team. Morgan's been with YHB for, you'd say, 3 years now, Morgan? Or is it, yeah, she'd probably tell you like feels like 10. But Morgan also is part of our construction team as well, and she is a huge asset to our team, and she has also worked in the transition specifically with foundation software from products like QuickBooks as well. So we really appreciate you all joining today, and we hope that we can kind of help you through the process of leading your clients, your company through transitioning to these specific softwares, and can see the benefits and kind of avoid some of the roadblocks that might hinder a smooth transition. So if we could just advance the slide. One more. So we'll start, oh, too fast, sorry, back one, I'm so sorry. Okay, so if we could start with like why you should leave QuickBooks. You know, a lot of times we encounter clients who are using QuickBooks, they're using it probably to the max of its capacity, but there's still a lot of manual work that goes in because it doesn't have construction specific features. And there's certain things that you can do to get contract specific costs and revenue reports, but it's not the same level as it's going to be in a specific software. In addition, a lot of information has to be pulled from QuickBooks and manipulated, and it also has to be done in a manner where it's calculations that are done outside of the accounting system. But I think one of the most important tools that we utilize in managing projects and managing construction companies is a work in process schedule, so that we can understand truly where jobs stand, the costs that are allocated to those specific jobs, and then, you know, other things that are specific in the industry like retention aren't as easy to account for as they would be in an industry specific software. So next slide, please. So from a construction specific software perspective, the built-in job costing and project management is really, you know, key element in making the move, especially as like clients get more and more larger, they grow, they get more projects that they're managing, but it also kind of helps bridge, you know, the field and what's going on outside of the accounting department into the management of the work in process schedule. You know, being able to kind of sync from the field to the office, where project managers can, you know, see the data, the expenses, the labor cost, everything that is on their jobs, because they're tied into the reporting that a construction specific software offers, is a huge benefit. The other thing is a lot of manual things associated with like certified payroll, lien waivers, insurance tracking. You can kind of step up the game to make a lot of this, um, automated so that a person isn't necessarily tracking or doing it, but then also just integrating other departments, whether it's estimating, whether it's job scheduling, the procurement. It's really one software can kind of elevate and touch so many different departments versus just accounting. And I think those are a lot of the limitations for a software like QuickBooks or something that's not industry specific that we face a lot as we see companies looking to make changes. Next slide, please. So we're going to do a couple quick polls.
Yeah, go ahead. So before we get into some of like the nitty gritty, just going to ask a couple of quick questions to kind of see who we have on today. So the first one, are you receiving timely and accurate reporting from QuickBooks? So just thinking about your current reporting processes, not necessarily whether you can pull a report, but kind of how much information that report actually gives you. Yeah.
I love to watch the way they change as you like progress through.
I know, and I was thinking pretty consistent, I think, with what we typically see. A lot of times people are able to get what they need, but more often than not, we hear that reports are delayed or someone has to kind of manually go in and try to reconcile the data, like Dory was saying, pull those external schedulings. So this is usually pretty accurate to what we see regularly. You can go to the next slide where we have a couple more poll questions. So for this one, we're looking at, are you performing functions manually outside of QuickBooks? So many of us are still kind of maintaining our job schedule, calculating our overhead allocations, in Excel, maybe keeping a separate change log order. So just seeing, are you able to get all of this data from QuickBooks? 100%, we are not able to get it. Same as what we typically see. Even very experienced accounting teams, when working in QuickBooks, end up having to, it wasn't built for job costing or construction reporting. And so we find a lot of workarounds that can get you by, but they aren't going to give you everything that you need, and it's definitely not in a timely manner. We can keep
Excel was invented. It's why Excel was created.
Exactly.
To support QuickBooks.
Yes. It is one of my favorite tools, just saying.
And then the next one is, does your current system rely on the know-how of specific individuals? And so this one is one that we see a lot. There's always like that person in the department who knows how to do all the things that they know how to do, but chaos can happen as soon as they try to take a vacation. If something happens and they're out for a few weeks, if they leave the company, how easy is it really for someone else to come in and be able to pick up right where they left off? This is also one of the biggest risks that we typically see, not just about like doing something wrong, but also where the knowledge lives. Does this create bottlenecks? Does this make the company a little bit more vulnerable? Same there. And then the last polling question we have here is, are you currently comparing estimated versus actual costs? And so this is kind of focusing, when you're answering this, on in real time is kind of like the caveat here. So a lot of times after a job wraps up, we're able to compare our estimates versus our actuals, but are you able to get this data month over month rather than after the job ends? Are you able to kind of see those variances real time and make adjustments?
I think one of the important things that we see with being able to compare real-time actual cost against the estimate is the ability to make decisions proactively rather than reactively. So you're not looking at historically how the job did, where, and then determining what went wrong. But if we can kind of see if we're overrunning labor, materials, what is happening, what can we do? A lot of times work may be done on a change order that's accumulating and we haven't necessarily requested the change order. So, having this information really is kind of like at the tips of your fingers to be able to have these insights is very helpful from a business perspective.
Exactly. You can go into the next slide and then I'll hand it back over to Dory. She's going to kind of go through that first transition benefit.
So one of the things I think that, again, touching on that is just timely and accurate financial reporting. Like a lot of times cost and billings are recorded in QuickBooks or an accounting system that's not necessarily industry specific. And there's a lot of, adjustments that need to be done in order to get it into a format for business decision making. And so I think having monthly financial reports provided to management give insights and give the ability to make proactive decisions. We usually have clients prepare monthly packets for management to include, these pretty much 4 or 5 things to kind of help with that. The information that's, needed to kind of have reliable and timely information, the balance sheet and income statement being one, because that's a point in time as to how are you doing from the income statement perspective. Are you, running short in your projections? Are you losing money? Are you making money? But the job schedule, I would say, is one of those things that should live and breathe with most construction companies. It's going to tell you kind of the contract value, the estimate that whether it needs to be evaluated. Are you running ahead of schedule? In relation to your cost, are you having cost overruns that you need to adjust your estimate on? And, again, kind of being able to convey that to the field, to the project managers as well, is such a huge benefit. But then also, a lot of owners like to look at accounts receivable and accounts payable. I've worked with clients, they're like, I want to know what I have cash in the bank. I want to know who owes me money. I want to know what I owe to individuals. I would also tag on to this, if you're looking at those 3 things and you have current debt, like a line of credit, always kind of tacking that balance into that as well, so that you can kind of see from a cash perspective, those 4 elements. There's going to be additional items, but those are the 4 kind of key elements. And also something that I think is a benefit from a construction specific software is an outstanding change order log. Like a lot of times there's so many change orders that are missed. We're delayed in getting the change orders approved by the customer, and that delays our ability to bill and ultimately delays our ability to turn that into cash to pay for the vendors and the labor that is in that work that was performed. So I think that, that element alone provides so much value in your switch from something like QuickBooks to an industry specific software. And also having, accurate, timely financial information. I often think about this in a similar fashion to visiting the doctor, right? When you visit the doctor, the first thing that they're going to do is they're going to ask you to step on a scale. And trust me, I've asked if they could, just go back a couple visits and use that weight for their visits, and they typically say no. But that's typically the same thing with like a bonding relationship or a financial institution that's requesting information. They're going to want to see the most current information to be able to help them make decisions. And so having this information maintained, not only does it provide internal use, it also gives you the ability to leverage this information for external use, like getting bonds for new contracts, getting an increase in your line of credit when you have an increase in your volume. So there's so many benefits from having timely and accurate financial information. And you can go to the next slide, please.
And so the next major benefit that we see when people make this transition is they no longer have the need to perform so many of these functions outside of their system. Like we talked about, the heavy reliance that we see on Excel, especially in the construction business, with things in relation to the job schedules, the indirect overhead allocations, and like Dory said, those change order logs. These processes are, one, very time consuming, every time there's a slight change to a job, every time there's a new cost that comes in, somebody has to also, in addition to putting it in their system, has to manually go in to whatever tracking method that they're using and make sure that that is also up to date. Then they have to make sure that everybody who needs access has the most up-to-date version of the Excel. And so this not only eats up like very valuable time, but it also opens the door for a lot of errors. It just takes one formula error. I'm sure we've all done a whip and then gotten to the end and been like, there's something wrong here. Where did I go wrong? And likely maybe you didn't drag down a formula correctly, or maybe somehow a plus and a minus got switched. And so it takes one formula error, one mistyped job number to kind of throw off that entire job schedule. And it also makes it difficult to know which version is the most up-to-date version, which one's the most current, which version should be the one that you're sending around. And so by bringing these processes inside of the accounting system, we not only eliminate this inefficiency, but we also save a lot of manual work hours each month. We improve the reliability of the data, and we allow the management to actually take this time and make decisions rather than spending this time maintaining the information, updating it. They're able to focus on interpreting it. It allows for the goal to have the system do the heavy lifting so that more of your time can be spent on making important financial decisions. We don't want to waste our time on data entry. We want to make sure that we're interpreting what's happening and making decisions in real time. You can go to the next slide.
One last thing I think I would say on that last topic as well is when we look at switching to these systems, a lot of times we're getting ready for growth or we are in a growth mode and we're looking to, do we need to add additional staff to our accounting department or to our field in order to get this information? And a lot of times you can see a benefit of at least 25% capacity just by automating so many things that are done manually and changing a lot of that work into, more of a volume driven need than the need to produce reports that can be easily produced within a construction specific software. And so I think when we look at like who is doing and working in the system, I think it is, to Morgan had pointed out early, does one employee prepare the accounting reports outside of the system? And what happens if that individual, were to become ill or want to go on vacation and we needed something for a bond and, we don't have that person necessarily, in-house to prepare it. And then also with one person who knows how to prepare like a job schedule and they know all of the formulas and so forth. And then also like when you have all of this information, I was speaking, to individuals recently about, I know how to estimate a job. I know what it's going to cost on a job, but I'm looking to maybe sell my company or I'm looking to kind of step back and have a limited role. Well, all of a sudden the information that's carried in someone's head or maybe managed through an Excel spreadsheet because of that knowledge is really kind of tied to that individual. And when we can take that knowledge and put it into a system that can be shared with others, we really can multiply the people that are involved in critical aspects like estimating, project management, financial reporting, and so forth in such a meaningful way. And then also like proprietary information, we look at a lot of times in construction, we have people that are with us for a very long time, but eventually they retire or, heaven forbid, if they were to get sick and they have all of that information. I had a client once who ended up in the hospital and was the only person that knew how to process payroll and have all the passwords and so forth associated with getting that task accomplished. And it was really tied up to that individual and it really created a difficult situation for that client. Also, there is time where there's just personnel changes in general. People leave organizations and it shouldn't impact the organization because an employee leaves, because systems should be able to be run by individuals who understand that task regardless of the specific individual. So when we get software that we can rely on to do the processes, it's now somebody coming in to run that software to process things differently in a software per se than relying on an Excel spreadsheet or, you know, alternative things that are maybe tying into something like QuickBooks. Also, if individuals, we had an individual that was preparing a job schedule, and that job schedule was kind of brought to us to kind of look at, and they're like, I don't quite understand like what's going on here. And it was something that the, you know, CFO of the company at the time was managing things through the preparation of that job schedule. So, you know, the adjustments to contracts, the adjustments to estimates, a lot of those things were done in an Excel spreadsheet. And so when we have those things tied to documents and in the accounting system that is designed to have line items in there, it's more transparent, and it also helps detect fraud and prevent, you know, those types of things from happening. Next slide, please.
And so the fourth major benefit of gaining real-time visibility into estimated costs versus actual costs, from an accounting perspective, I would say that this is one of the most impactful advantages that you'll see when moving to a construction-specific system. So traditionally, we see this comparison happening weeks or maybe even months after the fact. The reports are having to get compiled manually, and by the time that management is able to realize that the job is off track, the window to correct this course has already closed. But when you're in these construction-specific systems and the system is able to automatically capture costs as they're incurred, you're able to see those variances live, real-time as they're happening, and not just after the project is over. From a financial management perspective, that visibility really changes the game. It allows you to immediately identify which contracts are performing well and why these contracts are performing well. You're kind of able to see maybe one project manager is able to consistently bring in jobs that are under budget, or maybe there's a subcontractor that tends to deliver faster without, you know, compromising your quality. You can kind of make these real-time decisions to recognize, or this real-time data allows you to recognize these trends early and use them to inform your future bids, jobs, and budgets. On the other hand, you can also see when the costs are starting to kind of outpace your estimates. You can flag that immediately, and you're able to step in early and kind of address, maybe there's staffing level issue, maybe we need to renegotiate the pricing or issue a change order, and kind of tighten those cost controls before this issue compounds and you've completely blown that estimate. So it's a kind of a proactive oversight that allows the margins to be protected, and it also prevents some surprises that typically pop up at month or quarter or year end that we're all very familiar with, thinking that we were having, you know, a great month, a great quarter, and you're like, whoa, what happened here? And what makes this so powerful is it's really not just the accountants that benefit. It might be the accountants that are telling you need to do it, but the information isn't limited to just one department or one person. Everybody in the company, from the project managers, the operations, finance, and leadership, really, they're able to see the same up-to-date numbers. And that shared visibility typically builds a little bit more accountability and ensures that everyone feels that they're making the decisions on like the same set of facts. And over time, this information just kind of starts to tell a broader story. You start to see patterns. Maybe certain jobs consistently perform above or below your expectation, or maybe there's specific estimating assumptions that you've been making, but they're proving to be a little bit too aggressive. And having access to that means that you're not just reacting to these results after, you're actually able to actively learn from them, kind of refine your process, and build more data-driven approach to all of your future and current projects. Ultimately, this takes job costing from just a static report that you're reviewing at the end of the month or the quarter and makes it really a true management tool. It allows the ability for timely, informed decisions from leadership that are able to impact profitability. We can improve forecasting and accuracy as well as just strengthen overall long-term financial performance. You can go to the next slide.
And so I think we're going to delve into now like things that drive success in this process, because, you know, much of my career has been stepping in after implementations have maybe gone awry, and kind of helping right those. And so a lot of this comes from maybe stepping in a little too late. And so if we can get some of this knowledge ahead of the transition, I think that it helps. And I think the biggest piece is when evaluating moving from something like QuickBooks into an industry construction specific software, is you have to understand the users. This is something that I gained appreciation from because QuickBooks is so relatively easy to use, and a lot of the users don't necessarily come from an accounting or a financial background. They've learned what they've done in their career and their jobs through like hands-on experience, and so what they understand is tied to that software. And so when we look at moving from something, we need to evaluate the users, and that moves from finance into the field, into estimating, and how do we pull all of these things together. And there really is a piece of kind of like tone at the top to kind of say we're investing in this, we're providing support and training to get it off the ground. But one of the things that you have to kind of look at in this evaluation process, and I say this when I talk to, you know, people that are considering this all the time, is I can drive a car, but I can't fly a plane. And so if you were to put me in a plane, we're not even going to like, you know, be able to move the needle at all in moving that instrument, right? And so if we get a software package that is so complex, so over the top, but we don't have the proper users to make it go, we're kind of dead on impact with this. So I think evaluating kind of where your team is, and it could be a matter of we're in growth mode. We need to add to our team to get that experience in order to, you know, kind of step up to the next level. But also it's, you know, taking into account when you evaluate systems, can my team really use this and really embrace the investment that we're putting into this, you know, and then also looking at kind of like where your organization is and where it will be in the future. And I think that this is important because really, you can never make this move fast enough, because typically what happens is growth mode is taken over. You're really at a point where maybe like $5 to $10 million in volume ago, you should have made this decision. And so we're paying catch up. But the sooner that you can do it, the sooner that you can get ahead of growth, gives you the ability to really maximize the use of these software options. And then also involving cross-team functional teams, everybody in the organization, in making the selection, in part of the implementation. You know, again, talking to people that are trying to do this all the time, I'm like, you have to have somebody from your project management in here to kind of look at these products to say, hey, how can we use this? How can we get estimating involved? You know, how can we get our finance team involved? Where are the people that are going to be utilizing it like out in the field so they can see these products and kind of be part of the buy-in process really helps in a successful implementation. And this next bullet, cleaning up data before migration. Data cleanup is really one of the most key things that you should look at before you begin any implementation process, because, you know, the old adage, garbage in, garbage out. If we're not looking at like, you know, our vendor setups, if we're not looking at our customers, if we're not even looking, you know, as basic as our chart of accounts, we're going to bring some of the same problems into a new software, expecting the software to be the solution. And really it's not, it's the setup of it. And so kind of being proactive about what we need to change and how we need to utilize the software is critical to success in the process. And also planning for training, and then also post go live support. Both of these things I think are instrumental. And we often say when you do training, cross train. Make sure that you have more people within your organization that know how to utilize each individual module. or task that's being asked, because what could happen is if someone leaves, you always have a backup. If someone's on vacation, you have a backup to be able to have it done. But also it's just being able to collaborate with people within your organization to help jar, hey, what did they say when they were showing us how to do this? And it kind of really helps bring the teams together as well. And then also, don't give up the first time something doesn't come out after you go live on these systems. Like, you have support from the vendors to kind of help you with these sorts of things. It's going to look new. It's going to be different. And there are going to be bumps in the road. And so I think like just acknowledging those things and being prepared for them additionally drive to the success of the implementation. And so then I always say this, like everyone's like, okay, we want to get this in and we want it to go live tomorrow. And it's like going faster, pushing things, not taking time to make sure that people are adequately trained, that the information is in and that it's working, always takes longer. So just the overall adage, going faster always takes longer. But then I think the big driver is also setting realistic expectations. And so when a client would say to me, how long is it going to take for this implementation? And I'm like, you need to plan for 12 months. And they're kind of have like this, that's like a long time. It does not take 12 months to implement an accounting software, but it does take 12 months for everyone to be used to the new product. It does take 12 months for people to stop referencing maybe what they had done in the past and now relying on like the current processes, the current reports, the current information that we're generating from these new systems. And so if you set the expectation that I think from a year from when I start, I will be comfortable within the system, it really helps prepare people for the change management part of it, because everyone will always compare. It's unfortunate that it's kind of like, well, QuickBooks used to do this and I can't necessarily find it to look the same way or to have the same feel. And that is going to be true, but it's going to give you more reliable, more informative information in a way that you haven't had it before. And so I always say that there's an 80-20 rule. Like you should get 80% of the requirements, but there's going to be a 20%, aspect of it that you have to embrace change in what you're looking at and how it looks, because it is different. And then the other piece of it is don't be afraid to ask for help. Again, a lot of times we come in to kind of help as like an interpreter or to explain what the company is looking for or how they want to see the reporting, to kind of maybe bridge the gap between, I just know I go into QuickBooks and I print this specific report. And so we can kind of come in and say, they're looking for this information. How do we get that? And we can kind of translate into, here's the new report. Here's how it might be slightly different, or here's how you get this report to provide you the exact same information. And so I think asking for help, setting realistic expectation, and truly embracing kind of like the overall change management makes these processes so much smoother in the long run.
I can interject here too. I spend a lot of time on the implementation and consulting side of Foundation. I mean, I've been here forever doing this, and I couldn't agree with you more in asking for help. The number of companies that make these transitions without engaging with either their construction-specific CPA, or maybe their CPA doesn't focus on construction and doesn't know the questions to ask for a more specific piece of software, or even just engaging with a consultant in the space that truly understands the conversion process, and being so set in old ways. The owner is used to this spreadsheet, he wants this report every week, and not being open to what these systems can really do. And it's hard when you don't have that like, here is what you're going to run to do it, right? Because you can't really run reports until you get good data in there, but then you don't know how to get the data in there to be able to produce a sample report to see if it's going to work. So one of these things is just keeping in mind why you're changing applications, and understanding that, look, we might need to expand our ledger accounts, right? We've been used to account for indirect expenses, and now that's a whole different bucket of accounts that we're going to want to allocate costs into, because this system can do overhead calculations and generate overhead and burden our jobs with those costs. So all of those things, and like I said, the most successful implementations I did were when the CPAs were involved, because they're more accessible than the software trainers generally. Like, we schedule sessions and you go through them, but then you have homework to do. And when you can lean on your consultant or your CPA to guide you through some of these things, it's very, very, very helpful. And it really makes the entire process go much, much smoother.
And there's also going to be new things as well. So we also see where it's like you used to have maybe 20 direct cost accounts and you can boil it down to 5, because now you have this whole new cost code structure. And that's something that typically when you're in QuickBooks, you don't have that cost code structure. And so it's now a whole new dynamic that you're able to set up, whether it ties in your estimating. And so, to that point, it's like these are new things. And so sometimes it's just that specific training that we can provide that doesn't necessarily correlate into the system implementation. It's just the understanding of what can these things do for you that really help drive home the benefit of this process.
Yep.
And I think specifically the next 2 slides go very well with this. I feel like it kind of shows how passionate the 3 of us feel about this, because we are just like, no, listen, we have a lot of good things to say here. But so before diving into your implementation, so kind of prior to, one thing that gets overlooked frequently, but is a really critical step, is to kind of take a step back and really look at and observe and document your current accounting processes. So start by identifying like what's being done each month. We're thinking we want to get all the things, the reconciliations, the job cost updates, billings, payroll allocations, what monthly reports. The goal is to kind of capture a full, clear picture of what we're actually doing on a monthly basis. And it's not just what we have written down or maybe what your CPA says that you need to be doing, but what are people actually doing day to day? After we look at that, then it's kind of looking at who is doing these processes. Are these responsibilities very clearly defined? Do multiple people touch the same task? Is there only one person who owns it simply because they've always owned it and like they said that they own it, and so that's the way it's done? From an accounting standpoint, this is typically where we see a little bit of risk that creeps in. We've mentioned it a couple times now, but too much reliance on an individual and not enough shared understanding across the team creates a little bit of risk there. Next, we want to evaluate how are the current processes being done? Are they standardized? Are they documented? Does everyone have their own version of this process, or is everybody following that standard version? When each team member has that different approach, it's kind of impossible to maintain reliability. It's a little bit impossible to enforce those internal controls. So making sure that we're looking at how those processes are being done. And then when are these processes being done? For example, are your reconciliations happening after the month closes, or are you taking some time to review them continuously throughout the month? There's a lot of times we see very, very small timing adjustments. Dory loves to say touches take time. Like maybe we don't need to look at that every single day. Maybe we cut checks on the 15th and the 30th. There are certain days where we don't need to continuously touch it, because you're losing a lot of your efficiency there. And so when you align the timing of this flow with the real time data, you kind of create a system that works for you and your company, instead of forcing something that doesn't work and typically in turn forces you to play catch up later on. And then maybe the most important question here, but like, why are these processes being done? We often see that teams continue to just perform the steps how they've always been done. But implementation is kind of the perfect time to really challenge that, to ask, is this process necessary? Is the information that it produces useful to us? Who's using this information? Are they actually making any decisions based off of it? And you might kind of discover that there are certain reports that you're creating each month that nobody looks at, or there might be some steps that could be streamlined or automated entirely. So this type of process typically feels a little tedious to people, but I think it's very fundamental to the success of a successful implementation. So it helps you identify your inefficiencies, it helps you clarify your roles, and it strengthens your internal controls before you even get a new system in place. And the clearer that you are about your workflow and your processes now, what's working and what isn't for you, the more that it's truly going to add value and the smoother that your implementation will be later on. It kind of ensures that your new system is built around a process and processes that matter and not just what has always been done in the past. And we can go to the next slide because we're going to kind of dive a little bit deeper on something that Dory had mentioned, but on this data cleanup. So once you've taken that time to document your accounting processes and you understand what's happening, now it's time to kind of make sure that we're putting quality data into these new systems that supports those processes. We typically say garbage in, garbage out. You probably hear us say it multiple times a day to every client that we talk to because it really is the foundation. No matter how powerful your new system is or whatever system that you're using, no system can outperform horrible data. The information going in if it isn't clean, consistent, and reliable, then no matter what, your reports aren't going to be either. So that's why there's the period before the implementation is kind of the perfect time to ask yourself those questions and then do a deep cleanup of all of your data. Thinking of it as a fresh-ish start, you kind of have a foundation. So let's go through and see what would make your transition smoother and what would make your reporting stronger. Like we mentioned, the chart of accounts, starting there, simplify it where you can, make sure that it aligns with how you're going to want those reports to look in your new system. We see companies that have hundreds and hundreds of accounts that were just added over time to solve problems. They didn't know where to put something, so let's just create a new account. More accounts doesn't necessarily mean better visibility, but to Brian's point, we also see companies that don't have accounts that you do want to see on those reports. And so adding the accounts that we need, taking the ones that we don't to make sure that your financial statements are easier to read and not harder to read, focusing on a structure that's more logical and consistent and supports those insights that you're looking to gain. Next, we always want to review those cost codes. This is obviously a big one for construction companies specifically. Without looking at those cost codes, we typically see a lot of the same thing. Those codes have been carried forward for years, sometimes decades, and you want to make sure you're asking, do these codes reflect how we're actually managing jobs today? Are there categories that could be consolidated or renamed? We just want a consistent, meaningful cost code structure that allows for better job comparisons and cleaner reporting. And then your customer and vendor lists. We typically see a lot of clutter or duplicates. We see outdated names, maybe inactive accounts. So just going through, cleaning those up, not bringing in the things that we don't need to bring into a new system kind of not only prevents migration issue, but also saves time in the day-to-day operations. There's not 5,000 vendors to look through. Maybe there's 50 vendors to look through. When you're entering invoices and payments, you don't want to have to waste your time searching for that correct one that has, the S at the end rather than lacks it. So you just want to have clean, streamlined list. And then finally, kind of reviewing your accounts receivable and accounts payable balances. A lot of times we see unapplied credits. We want to verify that all of those are valid, verify everything that's open is accurate and valid. And you want to ensure that your reports are tying out at the very least, making sure these balances are cleaned up before conversion, because if you have issues there, they're going to carry over. It's going to create confusion in the new system. It's going to be a little bit harder to unwind. And so the goal here is to just go live with a clean slate, clean foundation. The time that you invest in the cleanup is what's going to save you more time and frustration down the road. It also gives your new software the best possible start, allowing you to have more accurate and reliable data and information from day one. And so we can go forward.
So I think it's important, as I mentioned before, of setting realistic expectations of exactly like how long it's going to take to process and the cleanup phase, move into the setup phase, the training phase, the testing phase, and the going live. And so really having realistic expectations and understanding that it's not something that's going to happen in a day, in a month. It's going to take, on average 4 to 6 months to get through the implementation process of it. Plus, once you decide to make the investment in a construction specific software, it usually takes, a minute to get on schedules, whether it's, assistance from your CPA or from the software training and implementation team. And then also just keeping in mind that it's not all going to work right the first time. There's going to be bumps in the road, and that's just, you know, it's learning. It's part of like adapting and changing so that you get the information. And as more information is put in the system, I think Brian made a very valid point. It's great to get the setup in there, but until the data is in there and the information is in there, there's really no way to understand completely if the information coming out is, you know, verified and, you know, accurate. And so that just takes a moment, but in the end, it's worth it. But you have to kind of really manage the expectations. And the other thing that I think it's so important is, you know, it's remembering it's not your old software. And so this would be, you know, like you break up with somebody and you start dating someone new, and now you're comparing them to the ex, right? And so it's like, so many times I'm like, well, QuickBooks used to do this, and I used to get this from QuickBooks. And I'm like, well, we're not in QuickBooks, but let's take that information and see how we can get that information from the new program, but also being open to that it's not going to look the same because it is different, and we have to just kind of separate ourselves from that. And there's a quick fact here that it takes on average 59 to 66 days for something to become a habit. And I think it's interesting because some things can be really quick that you pick them up in 4 days, and some it could take almost a year. And again, it's about like repetition, and doing it. You know, we're going to come in and we're going to try to process an invoice and accounts payable, and something's not going to go right. And we're going to fix that issue and enter it again, and it will go right. But, you know, now we have kind of a 50-50 win rate here, right? And so we have to keep doing this process before it comes natural. And so that's why, you know, when I suggest setting up these expectations, we're really looking at kind of a 12-month period to kind of say, okay, I'm just doing this like it's, you know, I was using my old system, and I'm not even thinking about that because I'm now really ingrained into the change and the habits that I formed in the new system. So the next slide, please. And so I think that, you know, change management is really pivotal in any transition process. And I say this all the time, you have to eat the elephant one bite at a time. If we start looking at all of the things that go into an implementation, it just becomes really overwhelming. But I think that, you know, a lot of these softwares have very detailed implementation plans that do it in stages, and they're structured in a way that is setting it up. So it's building blocks to get you to go live. And so I think just taking the approach and also understanding that there's an investment associated with that, because I always talk to clients about like the train's still moving ahead, even though we're doing this. So we still have to make sure that our customers are billed, that our vendors are paid, that our payroll is processed, and so forth. So you just have to understand, and that's where asking for help, getting consultants in to help with the process helps take some of the pressure off, and also contributes to success and management of the change process. And I always say that there are typically 3 types of individuals in any implementation. There are the people that are so eager about getting the technology in place and they're very happy. There are others that are like, well, I don't understand why, but I'll do this. And then there are the other people that are like, I like what I was doing. I don't really want to change. And, you know, it's kind of addressing those 3 types of people and making sure that you're involving them in the change process in a way to get them involved. I always lean towards the people that are most resistant is to getting their feedback as much as possible, because they're the ones that we need to convince and bring along. And, you know, they're the late adapters, but they will come along. But you have to also identify those types of things, because a lot of times there's security issues, fear of failure, fear of the unknown, and also things that it's like, yeah, I've just always had this little thing outstanding that didn't really reconcile. So it's those skeletons falling out. And so a lot of this is coming to the surface as we go through these implementations. And so you just have to realize that those things are there and just be on the forefront of addressing them to help with the success and manage the change to a new system. Next slide, please. We want to make sure we give enough time for questions too, so sorry.
Yeah, and some of this one we had talked about too, a lot when we went through some of the earlier slides. So it's nothing, just emphasizing a few important points, but communication is key to almost anything. When introducing a new technology, people want to understand why that this change is happening, what the company wants to gain from it. You want to make sure that that message is communicated clearly and that employees see it as maybe not just extra work, but something that's going to make their jobs easier and more efficient. We want to make sure that you're bringing them in, involving employees, giving them a role in the implementation. This kind of changes the mindset from this is something that's being done to me to this is something that I'm helping build. It gives them a sense of pride and success in these implementations. And like we had mentioned, training's huge. You want to always, the more opportunities that you have to practice using the system, the more confident and capable everyone's going to feel. Making sure that everyone has the knowledge that they need and just reinforcing the process that we've built out. And you don't want to do it in isolation. Like we had said, connecting with other users of the software, attending webinars, joining user groups, going to conferences. There's a lot of value in learning from others who are using the system. What's working for them, what's not working, what to avoid, any new features that they discovered. We see a lot of success with that. We do that, obviously, as like the accountants coming in with the software. So above all, and finally, you just want to keep your expectations realistic. It's not going to go perfectly from day one, but that's okay. We're going to focus on that long-term improvement that we're looking to build rather than those short-term hiccups. Next.
And so I think it's really understanding that there is going to be an investment associated with this. And so I think it's important to kind of understand that, but also understand that you're going to have a return on that investment, probably in a very short period of time. You have to understand that there's going to be cost associated with these products because it is an elevated system from something like QuickBooks. Also, there's going to be, consulting for the implementation and process development. There may be the need for new equipment and devices. A lot of these softwares, most of these softwares now are cloud-based, so it's probably going to eliminate the need for something to be housed on a server, but you may need to start investing in tablets or mobile phone aspects of it to get the real live data that's coming from the field into the software, specifically with timekeeping. Again, you have I went and talked to somebody who was using really paper timesheets. And if we can get that automated, it's flowing in and it removes the data entry from the person that has to key all of those in. So this efficiency really is relying on and leaning into technology. And that involves equipment, software, and so forth. So, and again, it should be the result that you should be getting from the system that collects data and transaction to one that provides information in a real-time basis so that you can have value and the ability to make real-time decisions. Next slide, please. So I think we're going to open it up to questions now. And so I'm going to start. I think we have one from Jeremy. Do you use Bill or some other software to process AP? What about, I can't see the full question. Let me see if I can. What about Adaptive?
Yeah, and I can, if we're talking specifically about Foundation, I can take that because there's a lot of very specific questions about other applications, but essentially what it sounds like the question is asking is about anything that would be considered like AP automation. Bill.com, Stamply, you name it, right? Foundation back in June, July acquired a company called Vendrix, and that will have three separate components. Vendrix has, the beginning is with expense cards. So they issue credit cards you can give out to your team. When they use those cards, they're immediately notified via text of the transaction. They click it, they can upload a receipt along with coding it for the appropriate job, cost code, cost class, etc. It can be routed potentially for approvals. And then that is sitting in an online console that can then push directly over into Foundation into payables. The same process will be available for AP automation, where your vendors will be able to email their invoices directly into a special email created for that particular application. AI will start taking off whatever information it can discern from that PDF or whatever the attachment is. And then again, it can be automatically routed for coding and approvals to various individuals. And then those will be able to be reviewed by anyone who runs the dashboard and push those into Foundation as well. And then a final piece of that is going to be outgoing bill payments. So rather than cutting checks and having to go through signatures and mailing and potential fraud of checks getting pulled out of the mail, et cetera, the payment side will automatically reach out to vendors, enroll them into whatever means of payment, whether they accept virtual cards or ACH or advanced ACH, next day, et cetera, or checks even. And those will be then done by third-party bill payment providers. So all good solutions, but again, similar functionality to bill, et cetera. In terms of integration, the new product that we acquired is going to be the best experience.
And I think with most of these, especially when you mentioned kind of like cards and so forth and the coding, like a lot of what you were talking about is really where the hiccups come in the monthly and the daily processing of transactions. And so any way we can implement automation into those processes really helps benefit the efficiencies from these systems.
100%. There's another question about what your CAS best practice for payroll is, and I asked what CAS represents. I'm assuming construction accounting software, best practice for payroll, mentioned ADP. Again, with Foundation, we have our own construction specific payroll service called Payroll for Construction. The benefit there is, number one, it is directly integrated with our software because you are actually doing payroll through Foundation, and we are simply doing the processing for you for direct deposits, printing checks, tax reporting, so on and so on and so on. When you bring in a third-party payroll service like ADP, Paychex, a whole lot, anybody, you run into integration issues because what is going to post through those applications may calculate slightly differently than what is going to be calculated through your Foundation accounting system, right? So, federal, FICA, state income taxes, they all should be percentages, but with rounding, they may not match directly to your third-party payroll provider, and it becomes a headache for reconciliation and so on. So, not to mention those systems do not have construction-specific payroll reporting capabilities, right? With Foundation, you're going to get your workers' comp reports, your certified payroll reports, your minority compliance reports, anything that is required from a compliance standpoint on the payroll side, you can get from Payroll for Construction, whether or not you use Foundation. That payroll service will actually work with QuickBooks and Sage and so on. We just create an export of the financial information to then push into those other applications. So that,
and I think that's one of the largest benefits when we talk about Foundation with some of our clients is I always say something like ADP tries to come in the front door and it doesn't work very well. But with Foundation, I feel like the payroll information from a processing perspective is kind of going through the system and out the back door from a compliance and paycheck perspective. And that flow alone makes it so much more streamlined. And I've rarely seen success with payroll services that kind of come in, but the exception would be, I did have a client that used Foundation Payroll that was imported into QuickBooks. It's probably the only time that I was like, something like that was successful because I'm not, I don't usually go, oh, let's transition to QuickBooks with this aspect, but it was the one because I think of the ingrained construction nature of that payroll service.
Yeah, no, absolutely. Another good question here is how long do companies typically keep QuickBooks Access after implementation of another system? So QuickBooks is VPN.
VPN, so you probably have it hosted on a remote site is what I'm probably thinking here. And so I would say if the information is there, I would probably keep it up to 5 to 7 years to have the information just from an audit perspective. And I would also probably document some of the information like general ledgers and so forth just to have in an electronic format in the short term. But I think the reliance after, like I said, that original 12 months will just naturally transition into the new software that you'll I don't see any need to access that information from a lot of my clients once they're truly ingrained into their new product.
So as you guys were going through the presentation, a few a few questions came up about just the implementation process, maybe thinking that this would go more through the nuts and bolts of how to convert the system. And I tried to answer as best I can, but I just want to talk kind of high level about a few of these things. Like, if you were transitioning from QuickBooks over to Foundation specifically, and I can only speak to the Foundation transition because I've never had to implement Sage or Viewpoint or anything else, but if you are coming over to Foundation software, we have data specialists that can assist you in going through QuickBooks and trying to extract a lot of your information, your list of vendors and customers and ledger accounts and employees and so on and so forth. And they can get that all formatted into templates that are able to be imported directly into Foundation. Now, back to some of the points during the presentation, right? Just because it comes out of QuickBooks doesn't mean it needs to go into Foundation. If you have 1,000 ledger accounts, that is by most standards completely unnecessary. How do we roll that together to get the most efficient set of accounts while still giving you the details that you're going to need? If you have those accounts set up because you have job cost data that comes through your ledger reporting, you need to forget that, because your job cost reporting is where that's going to come from. So that's one of the real challenges in going through the transition process, is just understanding where the new information comes from and how to compress some of these things. In terms of historical data, there are two different pieces. There's the current historical data, your open payables, your open receivables, all of those invoices that need to get into our software. Again, we can do some extraction and pull those transactions out and get those imported into Foundation. There is going to be some requirement to manipulate some of the data because it may not contain everything that we need. But our goal is to just rebuild those aging reports so that they're ready to import. And so once they're done, your agings agree back to QuickBooks. The other historical data prior to that, generally what we try to do is lump sum that as best we can. All of the cost history for what happened in QuickBooks up to this point with your job through the creation of that aging report, we can bring that over in lump sum. We don't need the gory detail. We don't need every transaction, but if you have any job breakdown and can just enter at your cutoff date, 10/31, here is where the costs to date were within this project and within this level of breakdown, depending on what detail you have available. So if you have any cost code breakdown or can break it down into labor, materials, etc., that can all be entered into the software manually. There is an import capability if you can get the data out, but sometimes it is just easier to manually key it in. But that's kind of what the transition process looks like. And this is, again, we're partnering with a consultant or CPA in your space, as well as really utilizing your implementation manager here to work through that process together. It's critical, absolutely critical in terms of what do I need in detail, and what can I bring in lump sum.
And I think it goes back to kind of the cleanup aspect of it as well, and some of the things that we kind of encourage on a monthly reconciliation process, right? So if we're producing electronic management packages on a monthly basis, we're going to have historical digital copies of information that we've provided to management, whether it's the AR aging or the AP aging and so forth. And we're going to be reviewing job cost reports. All, this process, to Brian's point, takes that summarized information and gets you to a point where you can now get this information from a system more detailed, more organized, and more real time, because it's actually tracking it the way that it needs to happen moving forward. So there's going to be a change between like how we kind of did it, more manual, more using Excel, but into a formalized process. But you should have information that you've been reporting up until this point, or that you've reconciled up until that go live point where you say, okay, here's where I've reconciled it through the end of the month for me to go live the beginning of the next month with that consolidated data that comes in. So I think that there's a bridge between those two, but making sure that barring any system conversion, that your information and your data is clean and correct really makes the implementation go so much smoother.
100%. I can't stress that enough in terms of the importance of cleaning up the old data before it comes in here, and also reconsidering, why did we buy a new piece of software? What are we trying to do that we couldn't do in our old software? Because too many times, and this is also when choosing another piece of software, is a lot of times the owner makes a decision and there's no input from the accounting staff or the project management staff or anybody that's going to be involved in this. And this really does need to be a collaborative team effort to really look at solutions and understand what we're getting into and have a clear end point. Like, this is what we're trying to accomplish, and this is why we're going to be leaving behind this old system, which means we're also going to leave behind some old processes and maybe even some of these older reports. Let's see if we can get that information out of a new report that might even work better.
Or, hey, look at the dashboard that might be now added to the software package.
Right. Yep. No, absolutely. Absolutely. So there's a series of questions from Patrick here, just and there's a lot, and I've already corresponded a little bit in terms of definitely scheduling a live demo of our software. There's questions, is it cloud-based? It is a hosted version. Can we use Word and Excel with the software? And my question to that would be, why do you want to? Because if the software does the things you need it to do, you probably won't need to use Word and Excel with it. That looks like it could be a crutch to do that. Is there a way to check inventory? Yes, we have an inventory module. There is some mobile access in the hosted environment in that you can access it from virtually anywhere with an internet connection. If you're talking mobile device, it depends on what portion of the product you're talking about. Multiple users reporting in real time. Again, depending on what they're trying to do, as long as the data is entered into the software and posted, anybody who's logged in and has access to the report is going to have the most up-to-date data at any point in time. And yes, you can open multiple entities within one organization. So if you're running 3 different companies under the umbrella of your company, we generally suggest having a separate database for each and every one of those companies, particularly if they have separate EINs. So I'm not sure if that answers the question, but again, these are all questions that are best asked in a very specific one-on-one demonstration, so that we have a complete, clear understanding of your requirements and what you're trying to do and whether or not it's a good fit. What else? Do we have any other questions here? I'm not seeing any others. There's one that doesn't really pertain to converting from QuickBooks, but it says they're in the process of implementing HCSS, and wanted to know if anything will pull over and integrate from HCSS to Foundation. And again, it depends on what you're trying to do. Are you using heavy bid? Are you using heavy job? If you're using both, yes, you can pull estimates out of HCSS and push those into Foundation. Heavy job, you can take some of the time and equipment consumption reporting, and that can be pulled in to streamline your time card entry and updating equipment usage costs and so on. So it is possible. Again, probably more specific conversation one-on-one is best. So outside of that, I don't know if you guys are seeing any other questions. I know we are officially past our drop dead date and time, and I just remembered I may have a back-to-back meeting here. But no, I don't. I'm good. I've got a whole 15 minutes to get to my next call. In any event, funny how you panic as soon as you see what time it actually is. One new question has popped up. Nope, that is a thank you. And Lisa, you were very welcome. So at this point, I am going to thank you both, Dory and Morgan, for joining us and giving us this great presentation. It's very informative. I love just the direction to ask for help and don't go it alone. QuickBooks is one of those self-train, open it, start using it right away systems. Foundation and other similar systems out on the market, specific for construction, they are not the choose your own adventure type application. Get guidance from people who know and understand the industry and the process, and your transition will go so much more smoothly. You will look back a year from the time you start moving forward and be so happy with where things went compared to just trying to go it alone.
Agreed 100%.
Yeah. And everybody who's still on the call and those of you who will listen to the recording later, we appreciate you attending. We appreciate your engagement, and we wish you the best of luck in whichever way you guys all decide to go.
Thank you.
Yeah, thank
Absolutely.
you.
Thanks, everyone. Bye-bye.